Well, welcome. My name is Kelly Bearden. I am the director of the CSU Bakersfield SBDC. I'm joined today by our resident webinar expert, Elizabeth Hamlin. Elizabeth is the producer of our webinar series and has been doing a fantastic job of getting me in front of this webinar. So we also have a fantastic presenter today. We have Judy Mahan from Cal Poly SBDC. She's going to be talking about a great program they have coming up for equity type investors, angel investors in the form of an angel conference. We'll talk about a little bit that goes into all that. And also, hey, it's March 21st, 2018. It's SBDC Day. So happy SBDC Day. And a little bit before we get going on the topic, let's look at a few things here that we need to maybe pay special attention. First of all, a little bit about the SBDC program. The SBDCs are in all 50 states. America's SBDCs have about 1,100 small business development centers across the country. We're one here in downtown Bakersfield. Judy is one in downtown San Luis Obispo. We also have 3 other centers throughout our region. We have one in the Fresno area at Clovis Community College. We have another up in the Modesto area, the Valley Sierra SBDC. And we have one at Cal Coastal in Salinas in Monterey County. So those are the 5 centers that can help you do a lot of stuff that you need toward angel investing or other topics for that matter. As far as our center here, we cover 3 counties, Mono County, Inyo County, Kern County. Find a lot of rural aspects to those 3 counties, but also a little bit of urban around the Bakersfield area and some really neat stuff going on in all 3 of those counties. So a little bit about our webinar today and our webinar interaction. We really want to have you ask questions. So please ask questions. I'll do the best I can to compile it and get it to Judy. Hopefully we'll have time at the end in order to do so. All of our attendees today are muted. So you will not be able to participate verbally, but there are other ways that you can participate. For example, if we do a poll, or if at the completion of the webinar, you will be mailed a survey. Please let us know what you think about the webinar series and other things that are going on. And also some handouts. If you want handout and other information, feel free to ask for that on the survey. So a few tips today on today's webinar. Mobile participation is supported. So you can be on the road on your iPhone, your iPad, your Android cell phone or other devices and actually view today's webinar. But for the best experience, we would like to see you use a desk or a laptop computer. There's also a full screen experience. So if you look right above the E and the D in webinar, right in there somewhere, you'll see an icon up there that allows you to open it up to a full-size screen. It's a nice screen, good enhancement as we continue to migrate toward a new platform here, trying to find the best experience for you out there in webinar. So we will have fun and other polls, and there are other settings that you can kind of play with underneath where the box on the left, you'll see a few things there, and you can check those and check a little bit of your dashboard to see what actually will work best for you. So at the SBDC, what do? We provide high quality, no cost, confidential one-on-one consulting. We also do a lot of training. We do our Kern Capital Summit. We have actually an East Kern Capital Summit, which angel investing will be covered at the end of May, coming up out in California City. So we do major conferences along those lines in our webinars, classes. There's our website address if you want to know more about what we do here. And there's other ways to connect as well. So connect with the SBDC via various social media channels. You can contact us. You can connect with us. You can be our friend. You can tweet with us and just about everything else. So that all being said, that brings us pretty much to our presenter and our presentation that we have today. And we really have a great topic today. And I know Judy Mahan's going to talk a lot about what we're doing, but we're really excited even here in the Bakersfield area to be actually in the formation stage, we hope, of an angel investment group. And a number of community leaders are coming together and they're meeting, and we're starting to get a lot of traction. It looks like we're moving in the right direction toward having an angel investment fund that invests in our small businesses right here in Kern County. It's interesting as we travel throughout our 3-county region, oftentimes either in East Kern and Ridgecrest area, oftentimes in the Eastern Sierra and Bishop and Mammoth Lakes, we find that there's even discussion going on about hopefully trying to get some type of angel investment up there for their communities as well. And we find that a lot of these angel investment groups and funds are incredibly local, and they really are people who are really looking to put money back in their community to assist entrepreneurs with some startup capital that they can't get from other lending sources. So that is why angel investor groups are so popular these days, and such a timely and great presentation we have for you today. So we have a number of angel groups that serve Central California. Judy will talk about some of those in a little bit, I'm sure. There's the Central Valley Angel Group that started up about 2 years ago in the Fresno area, the Central Valley Angel Network, which used to be the Stanislaus Merced Angels, Sacramento and San Joaquin Angels. So the San Joaquin Valley is really well represented. We have them also in the Bay Area and along the Central Coast. So there's a lot of these angel funds, and a lot of them really work really close together in finding and sourcing deals and actually making loans and investments that are really vital to our small, particularly technology-based businesses. So enough of me. Let's bring in Judy Mahan. Judy is the director of the Cal Poly SBDC, and she's also the incubator director for the Cal Poly Center for Innovation and Entrepreneurship. She holds a JD from the University of Paris X Law School and an LLM in International Tax Law at Golden Gate University. She has knowledge and experience in corporate law, nonprofits, public relations, legal research, business development, leadership, and many other industries. She's going to talk to us about angel investment. And Judy, before I turn it over to you, I appreciate your patience. We are learning a new platform here. We're getting through it pretty well, and we're trying to actually do this remotely again for another time. So Judy, it is outstanding having you joining us today. Thank you for being here and talking about this important subject, and take it away.
Hi, Kelly. Good morning. Thank you for having me on board, and I'm looking forward to the opportunity to share some information about angel investing. What we're going to cover today is we're going to look at what qualifies people to invest as angel investors. Who are these people? What type of startups and businesses do they invest in? What gets funded? How do we pitch to these investors? What makes a good pitch, and what are investors looking for, and how to put that across in your pitch. And then we'll discuss this angel conference event that we are holding in San Luis Obispo for the whole Central California region to try and stimulate angel investment activity in the region, and also resources that we have available through the SBDC to get ready to work with these investors. So an angel investor is typically a high net worth individual who has decided to invest some time and money in startups. And typically they do focus on tech and innovation startups, and I'll go into more detail as to why. To comply with securities laws, angel investors have to be accredited investors. This means that they own at least $1 million in assets, excluding the value of their primary residence, or they earn revenue of at least $200,000 a year for the past 2 years. It can if matched with their spouse combined, it can be a total annual income of $300,000 a year, with the expectation to continue making that income for a number of years to come. So that's pretty much it to qualify as an accredited investor. Once you've qualified, investors, these accredited investors get together, they form a group, an angel group, and they may or not create a fund via the creation of an LLC, and the LLC will be investing in the startup on behalf of this group of investors. So when we talk about angel groups, it's typically a group of accredited investors who've decided to create a fund and invest money. They pooled their money into that fund, and they will invest money from that fund into the startup. So what stage do angels invest in? You have a startup. Maybe you're still in the ideation phase. You have a great idea. That's really early. That's too early for investors. You're going to show that you're willing to put some skin in the game and either put in some sweat equity and ideally a little bit of financial backing into your own business to get past that idea phase. Then maybe your startup is going to start taking off. Maybe you're actually going to decide to incorporate, create a legal entity, and you're starting to need a little bit more funding. You've proven the concept. Maybe you've built a prototype. Maybe you've sold your first few MVPs. And ideally, this is a phase where you'll start working with friends, what we call friends and family. You're going to solicit funding from people who really believe in this amazing idea. They're seeing the traction and they see the vision. Other options are to launch crowdfunding campaigns. We've had some very successful crowdfunding campaigns run through our SBDC program that have done well. That's a great way to potentially raise your first $10,000 to up to $100,000. You could also participate in a 12-week accelerator program. There are a number of them in the Bay Area, but they're becoming more and more popular outside of the Bay Area, where you can potentially receive an investment of $50,000 to $100,000 to participate into this 12-week program, intensive program. You may have to give up a small percentage of equity in exchange for that funding, but you get a tremendous amount of mentorship and support while you're in the program. Some examples are Y Combinator, 500 Startups. These are Techstars, and these are the first two are in the Bay Area. Techstars has a number of locations throughout the U.S. And another fantastic resource that we don't talk about much are SBIR and STTR grants. These are government grants. They are awarded through federal agencies. And again, we've had a number of startups qualify for these grants out of San Luis Obispo and throughout our region in Central California. And what's fantastic about those grants is you don't have to give up any equity from your startup in order to receive the funding. So those are all great options. Once you've exhausted those options, and more importantly, made more progress in the growth of the business, then is a good time to start talking to angel investors. They help you get through that initial validation and help you raise the money to get to that next big push, to get that next big chunk of customers, maybe the first run of manufacturing. So that's when they invest. And you're not quite ready for venture capital investment. Venture capital investment will probably come in after you've raised your first $500,000 to $1 million. So angel investors are just perfect to raise that first $100,000, $200,000, $500,000, all the way up to maybe $1 million. Then you'll close that round with angels, and your next round of funding will be with venture capital. After that, the options are to either get acquired at some point in time. That's what's called the exit strategy, and or do an initial public offering. So that was a pretty extensive talk on that piece, but it kind of covers the growth of the company from idea all the way to exit, and the different players that come into play, that jump in on the funding side. So there are different types of angel investing. Sometimes it can be done by individual angels. As mentioned earlier, sometimes these angels will get together and create a fund. So those are different alliances that can happen. Or the lone wolf scenario that we discussed, the individual. There are online platforms that you can apply to, and that will then distribute your pitch, your investment deck, your investor deck, to a number of different angel groups at the same time. A lot of angel groups use the platform called Gust. And then sometimes a new phenomena is angel groups will syndicate. And syndicating means that they actually will, a number of groups will invest together into one deal. So that's another option as well. Sometimes angel groups will make one investment, and then there's a sidecar deal that happens. There's an individual that will invest on the side as an individual. So lots of recipes. There's no one way to do this. Lots of options, lots of flexibility. The special purpose vehicle is when the fund formed by the angel group is formed to invest in just one company, and then the fund is closed. And this is what we have set up for our angel conference, and I'll get into more details on that later. Let's look at what the industry looks like from the angel perspective. So back in 2016, those are the best numbers we have right now. There are some 2017 numbers coming out. But we know that there are approximately 300,000 individual investors in the U.S. Angel groups have invested $21.6 billion in 2016. It's a pretty significant amount. 64,360 deals have been made in that year. And each round of investment averages $337,000. So that gives you a really good snapshot of the activity back in 16. Investors are getting returns on their investment. So when and if the startup does get acquired, maybe 5-10 years down the road, they are receiving between 2.5% to 22% of a return on their investment. That sounds great. However, they don't get that return on every single one of their investments. They're likely to get that on, 5%, 5 to 10% of their investments. A good 70% of their investments brings back a lower return than what was invested. So it's very high risk, extremely high risk. If they have a success rate of 2 out of 10, they're doing really well. So they are looking for those home runs. They're looking for some home runs. So let's go to the next slide, and we'll look at what, in their eyes, what can qualify as a home run. Most importantly, investors are looking for very strong teams. They want to see founders, and again, there's a plural, founders. They don't like solo founders. They like to see a team in place, so at least 2 or 3 co-founders. And they want to see a team that is coachable, that is going to execute, that has prior expertise, ideally, go-getters, a team that's going to work really, really hard, but that's willing to take on advice, that knows how to network, etc. So the team is the most fundamental piece of what they're looking at first. Secondly, the second most important piece of the equation is they want to see a startup that is very scalable, very high growth, which means that you have to have an extremely large target market. Scalability and high growth is definitely minimizes the risk. That means there's an opportunity to, to grab a big piece of that market, and for the company, the startup, to generate revenue and to grow. The great product or service, that is a consideration, but it is not the #1 consideration. I think investors expect, they know, they've seen it before. You may start up with a certain product or service, and it will probably evolve and change over time. It's what's often referred to as the pivot. Sometimes you go to market with a certain product, you get a lot of customer feedback, and you realize this is not quite what the customer must have, but they need something that's slightly different from what we thought they needed to have. Ideally, it's a must-have product, not a nice-to-have. If it's nice to have, but that is a lot less compelling to investors. And the product or service has to solve a very, very clear problem. So it's when you do your pitch, actually one of the first things investors expect you to do is to identify the problem. What's the problem? And tell us how you're solving it. It has to be a very clear problem, an obvious problem. And the whole goal of your business is to create value for your customer. That's the overview. If we get into more details, they are going to then want to see what's your competitive advantage. Do you have any IP that you can? Do you have patents that make you give you a product that you can defend? Will you have the money to be able to defend it? That's also an important component. If you don't have strong IP, do you have a head start in the market? Do you already have a very large following? Do you have the eyeballs that you need for your service, for your product, to be able to get a large chunk of that market? And how are you materially different from your competitors? Competition can be good. Competition can validate that there is a need for what you have to offer, but how are you different? How are you creating more value than your competitors are? That's important too. That can be a huge competitive advantage. Fragmented markets are great. For example, one of the new hot markets is augmented reality, virtual reality. There's no clear leaders in that market at this time. So fragmented market is good. If it's a market where there's already a monopoly, where there's some very, very strong leaders in that market, it is less compelling to investors. Very importantly, they do want to see a very detailed sales and marketing plan, because at the end of the day, that is how you're going to execute. So they want to see that strong team that's going to execute, but they want to know how you're going to execute. You have to have a very clear strategy, clear distribution channels. If you don't have sales, that's the end of the startup. So that's very crucial. It seems obvious, but sometimes it's not given enough detailed attention. And then the exit strategy is important. They want to know that the investors want to see that you've thought that through. So if there is a big competitor in your market, maybe that competitor could be an excellent partner at some point in time, or the future acquirer of your company. And the fact that you're able to identify that is great and is important, because then they can see how, when, if they will get an ROI on their investment. So now let's look at the pitch. Now that we know what these investors are looking for, you are going to prepare a pitch to present your startup to these investors. Typically, the way the actual process works is these investors will gather in a room, a conference room. You will walk in and you will have 10 minutes to present your PowerPoint presentation. Then this will be followed up by some Q&A. The investors will ask a lot of questions. What we recommend here is to never get on the defensive. It's very hard to do. But when investors are asking questions, this is a good way to showcase that you are listening. The question often comes with advice. Investors have a hard time not trying to provide advice at the same time because they're passionate, they're entrepreneurs themselves, they get excited about your business. And to be able to listen to that advice, if you don't know the answer, that's okay. Being able to say, that's a great comment, I'll look into that and get back to you is a great way to handle those situations. And it gives you an opportunity to follow up with the investors by email or by phone or with another meeting, which is good too. So remember to be very open, very coachable, and show that you're willing to work with them during that Q&A session. Then once you leave, the investors will discuss what they've just seen. They will discuss your presentation, and they'll decide whether or not to start due diligence. Due diligence means that they're going to, if they decide to move forward with that, they're going to send you a list of items, questions, things that they need answered. They want to see all of your corporate documents. Were you properly incorporated? Have you issued stock to the founders of the business? And if so, how much, to who? That's what's called the cap table, the capitalization table of the company. Have you given any shares to anyone else, to independent contractors, to employees? Have you set up a stock option plan? Do you have contracts in place? They'll want to see copies of all those contracts. Do you have customers? They will want to call a large number of your customers to check in with them and see how you're doing. Are the customers satisfied? Are they happy with the product or service that they've received from your startup? So that's the due diligence process. Then if they decide they want to move forward, they're happy with the diligence, they've gotten some great answers from customers, from you, they feel comfortable moving forward with the investment, they'll start negotiating terms. What does this investment look like? And usually at the angel phase of investment, the investment will be done through a convertible promissory note. And maybe we can do a session one day on the details around convertible notes. But basically it's both a debt and equity instrument. And the investor is saying, here's $100,000, which you need to pay back to me within 24 months at a 6% interest rate. However, if you raise money from venture capital, my investment of $100,000 will convert into preferred stock, which is the stock that you will issue to a venture capital group. So that's how the convertible note pretty much, that's the layout of how it works. And once the investment's made, the investor may have asked for information rights. Usually those don't kick in until there's a VC deal. But whether or not they've asked for it, we do recommend that the startup keep their investors informed, updated on what's going on with the business, at least on a monthly basis. So that's the process itself. What about the pitch deck? What is in the pitch deck? So you'll have your elevator pitch. You'll highlight the problem, the solution. We talked about that briefly earlier. You'll address that big target market. And how are you going to make money? The business model. How are you going to generate revenue? Are you selling software as a service? Is it an app and you're going to make money through advertising? What's the model? So you have to identify that. Then you can go into the product, the service, the tech behind it. And you do need to highlight who your competitors are. And as mentioned earlier, what is your marketing plan? How are you going to do sales? What are your distribution channels going to look like? And at the very end, that's where you keep the best for last, and that's the most important piece that investors are going to focus on is the team. Who is the team? Do you have a board of advisors in place? Do you have great advisors? Highlight them, talk about them. And once you've made your ask, for example, you're trying to raise $100,000, you do need to validate and highlight how you are planning to use those funds. Will you be using that money to hire a CTO or CFO or CMO? Who are you hiring? Are you going to spend money on that? Are you just going to spend the money on the marketing plan that you've highlighted? So you do need to lay that out a little bit. And again, all of our SBDCs in our region are very well versed in helping our companies or startups prepare these types of decks to work with investors. So one of the events that we have planned on March 29th here in San Luis Obispo is our Central California Angel Conference. We have gathered 15 investors to invest in a fund. The fund has been set up. It was set up in January. We've raised a certain amount of money, and that money will be invested on March 29th into one startup. We've had about 44 startups apply to be considered for the Angel Conference, and we've narrowed it down to our top 6. These top 6 startups will be presenting their pitch deck in front of, we have about 200 to 300 guests invited to attend the dinner event. They'll pitch live on a stage, and the members of the fund that we've been able to gather together will make an investment decision on who to invest their money in. So they are doing due diligence right now, and they will be ready to make an investment at that time. So we're very excited. This is the first time we're doing this in Central California. The whole region is invited to attend. It's on March 29th from 4:30 to 9 p.m. We also have a phenomenal speaker coming, John McFarlane, who is the founder and original CEO of Sonos, a company based out of Santa Barbara. It's a $1 billion revenue company. They're huge. Fascinating founder and CEO. He's worth coming. He's worth listening to. So I encourage anyone who's interested to come to the event. And that's it from me. Here's more information about the event, and I hope I've given a good overview on angel investing. And we're happy to answer questions either through the webinar or through follow-ups by email or through each of the SBDC centers in our region. Thank you very much, and it was a real pleasure talking with you all this morning.
On this Angel Conference, my company anyway. Are you planning on doing another?
So yeah, good question. We are working with a number of people out of Fresno to try and launch a conference in Fresno. We were hoping in the fall of 2018, so we're still in discussions, really trying hard to make that happen. If not, this is definitely an event that we want to hold annually. So we will plan to hold this event again in San Luis Obispo in March of 2019, and again with another event based in Fresno in the fall of 2019. So there's definitely some real excitement around this, and we want to keep it going.
I think the next question deals with angel investing in general, and it's how much ownership do I have to give up to an angel investor?
Right. So at the start, you're not really giving up any ownership. Like I said, at the start, it really is a debt instrument. It's someone has loaned you money with an interest rate. You'll only really know what that amount converts to when you do your round of funding with venture capital. Venture capital, typically when you do your first Series A preferred stock financing round, you will probably be giving up at least 20% of the business at that point in time. And that's when you're raising your next, $2, $3, $4, $5 million. So that gives you a sort of a very big picture range. And of course, deals are done in all shapes and sizes. So even though this is the general overview, there's a lot of flexibility and a lot of margin within that.
Our next question is from Jim. Thanks for the question, Jim, by the way. And he says that my IP is awesome. I am super sensitive to sharing it or discussing it with anyone. What options do I have when I look for private investment? And did you?
So I apologize, Kelly. I was not able to hear that question.
Okay. Well, it had to do with IP. Their IP is awesome, and they're sharing and discussing what options they might have. So I think they're worried about sharing their IP as far as getting funding, if that helps.
So all that I heard is sharing IP if they get their funding. I didn't. So all that I heard is sharing IP if they get their funding. I did not hear the start of the question. I'm sorry.
It just had to do. It sounds like it's kind of like a non-disclosure form question. I think that they're worried about sharing their IP. Where did my volume go?
Okay, so sharing IP. So a number startups are often extremely concerned about sharing IP, sharing information about their IP with investors, and they want to ask investors to sign non-disclosure agreements, NDA, or confidentiality agreements. Unfortunately, 99.9% of investors will refuse to sign NDAs. Understandably, they look at many, many deals on a daily basis, and they cannot put themselves in a position where they're signing NDAs. It would be too hard for them to keep track of what they've signed with whom. You know, the company is so early that typically the risk is low of anyone running away with your idea and executing upon trying to launch a competitive business. You know, you have to trust the system. Investors are not, you know, they have a reputation to maintain. They're not, you know, their goal is not to stab anyone in the back. They want to see deal flow. They want to see a lot of deals. They know to keep things confidential. And so you have to learn to just build trust with investors at the start. It's very difficult. It's overwhelming. It feels like you're taking a big risk on your end, but it will be very difficult to get any investor to sign an NDA.
Okay, one last question here for you, Judy. How is your SBDC assisting individual companies at the event? I guess it's the companies that are presenting.
Yeah, good question. So we've worked with most of these companies for 6 months or more. We've helped them get their pitch deck ready. We've helped them practice giving their presentation. We have a pool of experts that volunteer their time to help these startups go through the process and go through the Q&A process with them. So we organize a lot of mock pitching, if you will. We help them work with our CFOs to come up with strong financials, good budgets that make sense, that validate, you know, how they want to use their funds if they raise money. We have them work with our marketing and sales experts to come up with and build a strong, you know, marketing plan. So we definitely have a great pool of experts that can break down the pitch deck and work on individual pieces of it. And then we help bring it all together for mock pitching throughout that 6-month period to prep them for the real thing.
Okay, one other question came in. So this is the last question. How will the winning company that win the angel event on the 29th, how will they negotiate ownership based on the valuation of their company? Question mark.
So they've already negotiated, the deal will get negotiated. We've already seen term sheets from our top 6 companies of what they expect to raise. We've seen their pitch decks already. And they've already provided us deal terms for what they want. So those negotiations are happening right now with the top 6, so that on the day of, everyone's ready, and there'll be at least a pretty good big picture agreement on what the deal is going to look like with each particular startup if the deal was to go through. So the startups have their corporate attorney that is starting to get involved and will help represent them to help negotiate the deal. And the angel investors are also working with attorneys to help figure out what deals are important to them. So those conversations are already happening slowly as we're leading up to the event. But most likely there'll be a little bit more negotiation going on post-event. But the big picture items will have been taken care of.
Well, what an exciting event coming up on March 29th. It's at the Alex Madonna Expo Center in San Luis Obispo. 6 companies are going to pitch. One of them is going to walk away with a 6-figure investment. Great economic development tool for your community. Very exciting. Coming up, they can purchase tickets, and they can go to your website and purchase tickets for the dinner and for the event. I'm looking forward to it. I know it's going to be an outstanding event. One last question, Judy. Are you looking at doing something afterward? Maybe an angel fund or some other group, or are you going to continue with the conference?
No, that's a great question. So part of the idea is that we are trying to stimulate access to capital, right? So we're trying to provide as many opportunities to create access to capital for our startups. And we would love to see these investors, as mentioned earlier, this fund is going to make one investment in one startup. If they decide that they want to create a new angel group or join an existing angel group, that would be fantastic. Again, creating additional opportunities to make more than this one investment and make continuing investments in other startups throughout the year. That would be just, the dream scenario. So we're hoping we're getting these investors excited enough about the opportunities that we have locally and within our region, and whet their appetite to do more activity and to do more investing throughout the year. So hopefully we can we'll have some updates a year from now, and we'll have seen some additional activity going on.
Well, fantastic program. Looking forward to it. Thank you for joining us today. Great content on angel investors. Angel investors are out there. They're out there throughout California looking for good, viable deals. You're bringing them 6. There could be 5 lovely consolation prizes for the non-company, the companies that are not selected, the company not the big winner on the 29th. So that's got to be good too. So great deal with this. And
that's right.
Judy, great event. For Judy Mahan, I'm Kelly Bearden. That's all the time we have for today. If you have any other questions, please email them in and we'll try to get them answered. Everybody have a fantastic day. Judy, great event to see you on the 29th. Thank you for joining us.
Great. Thank you, Kelly.
Hey, goodbye now.